This is Bloomberg Markets. I'm Scarlet along with Lisa Abramowicz. We're just moments away from the release of the Federal Reserve's Beige book, which is the central bank's summary of economic conditions in each of its 12 regions. So ahead of that, let's give you a quick update here on the markets as we await those headlines. S&P modestly higher, the two-year yield coming down to 2.61%, the 10-year yield inching up to 2.87%. Dollar index slightly higher as well. So as we look for these headlines, wow, they all come out at the same time.
Oh my gosh, just flooding.
I'm going to pick up on the red headline,
yes,
which is the red sticky headline, which indicates that Federal Reserve sees manufacturers across the U.S. expressing concerns on tariffs. So
yes,
certainly
indeed.
that is something that we'll be watching for as earnings season gets underway as well.
Yes, but, they also said that the Fed sees faster wage growth in a couple of districts. So the employment and wage gains were modest to moderate. Also price increases, in other words, the engage of inflation, also modest to moderate. So a sort of steady as she goes kind of reading. Not that surprising, though, to see that there is that concern about the tariffs.
Yeah, just to go on a little bit more with those tariffs, the Fed is saying that the tariffs are causing disruptions. It's boosting prices in many districts. So it's seen as inflationary, or there's evidence, at least on a preliminary basis, that perhaps it's inflationary. All districts reporting tight labor markets and higher spending as well. So that kind of forms the backdrop here as these tariff concerns ripple through the different areas that the Federal Reserve tracks. In addition, we should mention as well, key input prices rose further as tariffs boost metals. So the effect of the tariffs is already being felt. And of course, there's still more tariffs perhaps to be implemented in the coming weeks.
Absolutely. We also see that at least employees and employers report an inability to find workers, and that this could actually hurt growth going forward. This is a lot of what we've been hearing from a lot of chief executives and business owners, that indeed it has been hard to find people to do the jobs. An interesting picture, definitely confirms a lot of what we have been seeing, frankly, and hearing about, and frankly what we heard from Jay Powell today on Capitol Hill.
But the backdrop here overall is still one in which the U.S. economic expansion is rolling along. Labor markets are tightening. They tightened in June. They've tightened in early July, even as these tariffs have heightened concerns among manufacturers and boosted some of those prices, for instance, metals prices. So the backdrop is still fairly benign, we should mention here, even as the Federal Reserve says that trade concerns are spreading. Now, in terms of market impact, this usually doesn't have much of a market impact, Lisa, when you look at how it tracks equities. We're seeing a little bit of a pickup there in the S&P 500, but it had been drifting lower, still well within the range of what we've been trading in over the past hour.
Yeah, 10-year Treasury yields also taking a little bit of a leg higher, but really this is a marginal movement, and usually we don't see much of anything. So definitely confirmation. I'm sure people will be parsing through this to get some insight.